Hi, this is Mark with your analysis for the week commencing the 10th of March. This is the British pound on a monthly chart, and I showed you last week, for those of us who have been in here since the break at 157.00, how I was managing the trade. And let's go to daily. And what I was showing you last week, I've been fortunate here. I am in a long-term trade, hoping to catch a 3,000 pip move, and I also had got in as a short-term. And on the short-term, I had taken half of my profit off and I had moved my stop down to 152.40 area. So what do you do next? Well, the thing is now, from a long-term perspective, as I say, I'm aiming for this 3,000 pips, and if you knew, the reason is this is a technical analysis. The theory here is this is a potential triangle break, and you look at the middle figure, ignore the last digit, but that is a potential 3,000 pip move there, should be replicated here. So goes the theory. So that's what I'm hoping for. The scary bit now is you don't want to get taken out by a couple of pips and then miss the rest of the move. So the way I'm going to play this, I am going to leave for now my long-term trade stop exactly where it is. Last week price came back up towards it, turned back down again. The smaller trade I'm going to move, and I'm going to start following this by 3 candle highs. So here we go. You've got just above the 5100, so I'm going to go anywhere around 151.55. I will place my stop just above this candle. On Monday's candle close, if the pound continues to fall, I will be dragging this behind me, and I'll probably start to drag the longer term one as well. It is tricky. The problem is at the moment, what I'm really not comfortable with here, I have a 330 odd pips stop. Now I have got 400 odd pips locked in, but there's a lot of money potentially here, so it is tricky, but that is the way I will play it. I'm going to trail my smaller trade stop down as we move along through the week, hopefully, and I'm going to just keep my eye on the longer term move and perhaps come down a little more slowly. If you've missed this trade, then the logical area to be looking for your first point of entry is anywhere around 150. 150 is a huge psych level, and the NFP news drove us through there on Friday, and therefore it's the first place to be looking. However, I am a little concerned. It is unusual for pairs to keep falling without a decent or substantial pullback. And if you look through February, I mean, this has been a heck of a fall here. You usually get some consolidation, pullback, and then a view to a short. If we get a bigger pullback, anywhere up around 150.200, I would definitely be looking to add to the position and short again. This is that euro I was telling you about. This is on the weekly, and look what happened last week. We went absolutely nowhere. We went up, down, and closed in virtually the same position, and therefore this is a little bit worrying for me at the moment. We've had a 5-8 cross. We broke a trend line. We've now stayed below this 55 on a weekly. Stochastics were rolling over. We had MACD divergence. My concern here is 129.00. If he's going to bounce anywhere back up again, that will be the place. If I'm looking at this as a long-term technical move, then the way to play this is to wait for a break and close below 129. And in fact, we would go below this fib, which is 128.80 odd. So you would say a clear break and close below 128.80 on a daily candle. Then I would look for a pullback with a view to a potential big move down. The danger at the moment is that between the central banks, they're quite possibly manipulating this, and I have a feeling that's what's going on. You think about Friday, there was very positive jobs news came out for the US. Fitch have now downgraded Italy, I think, to triple B, which is a joke anyway, really, because it should be triple Z for the state of the economy there, but it's still held above this 130. Now, if you're trading intraday, the way that you could play this, you either look for a break or a close below 130, and then you go down to a 4 hour and you say, well, look, this was last week's double treble bottom. It's all a bit messy for me, and as you know, I really do prefer a pullback. First area of interest intraday for a pullback will be back up here to this weekly 55, but my longer term, more conservative entry would be a break and close below 129.00 or a short back down at 132.00. This is the Swissy, and I showed you in recent weeks why I was preferring this trade, and I showed you the week before last how this was a perfect example of an M2 We finally had a breakout of a strong area of resistance. Very next candle came down or touched it almost to the pip, and that trade is now 150 odd pips in profit. How do you play it if you missed it? I do prefer the Swissy at the moment, 93.50 for sure, but if we're not going to get the pullbacks, then you start to move your support lines up. You're looking across to the left for areas of previous support and resistance, and anywhere really around 9400 I would be interested to long the Swissy. Aussie dollar on a weekly, it's still trying to break below this 10200. And I said to you last week, I prefer a pullback, and that's what I'm still hoping for because of this weekly fib scenario. What I said to you is if you were looking to short, a more aggressive entry was a short at 10200, but I would only do so from a daily candle, and hopefully this candle kept you out. Now it was fractionally below 10200, but you know from this candle formation that that would not be the time to start taking a short. So I didn't get the trade last week. 103.40 still the area. I am interested to short this pair. More aggressive entry, as I've just explained, is go below 190, pull back a candle close on a daily chart, and then I would look to short. If you're trading intraday, people get confused with this. If you're trading intraday, then you have more opportunities, and basically you do your analysis slightly differently. You are still looking for the trend, and the trend is clearly down at the moment on this Aussie dollar. And I was talking to one of the members, and we were having a look at some charts and some analysis, and this is the Aussie dollar on a 4-hour chart. And what we'd had in place, we'd put in place a trend line, and John and I were talking down here earlier in the week, and although it didn't get back up to the 103.40 that I wanted, it did come up and touch this trend line to the pip again, and you had MACD divergence, so there were clues. So if you're looking to trade intraday, look for the overall trend and then look for reasons to enter a trade. As ever, we are watching gold, and that gave us no clues last week because that opened and closed in the same place. And silver as well is just bobbling along. It's make your mind up time. The US job news was very positive. According to the official figures, shall we say, the job rate is now only 7.9%. The other 18% of people who are currently unemployed in the US are disinterested workers, I think it's called. I've forgotten the name, but anyway. Aussie dollar yen. All of the yens broke out last week, and therefore the simple scenario with these, you simply look for a pullback to the main area of support and resistance. Remember, only take one yen trade at a time. They are correlated. They are all cross pairs other than the dollar yen, and therefore you only look for one. This 97.40 was clearly major resistance. Price finally broke through there on Friday, and therefore you're looking for a pullback with a view to a further long. Same pair on a 4-hour chart, and this was what I was looking at during the week. You had this resistance. Price broke through. It was all a little bit messy, and it set off, but that was definitely the area I will be interested to long. Euro yen, not as clear. The previous weeks we had bounces at 120.75, and then it all got messy again. I would prefer a bigger pullback on this, and 120.75 area is still the one. Remember, I would only take one at a time. Dollar yen, again, preferred area is a pullback to 9300, which is almost in the area of this trend line and previous support and resistance, but a more aggressive entry is simply a break and close above this resistance. Personally, I prefer the Aussie dollar yen of the three. CAD, price again spinning top at the top of a move after a breakout. These are all market indications that people can't make their minds up at the moment where we're going to go next, and that makes me very wary. But a pullback to 10200, I would be interested now to long the CAD. Finally, the euro pound. I was showing you last week I had this weekly trend line in place, and let's just expand the charts. And I was showing you, I was saying last Sunday, one option was a short at 8700, which worked perfectly Monday. I didn't take it in truth. It's bobbled around here all week. If you're going to think in terms of a long with this pair, you either need a pullback again, and I would be thinking in terms of 8500, or you look for a break and a close above this trend line, then a pullback with a view to a long. And realistically, you want to go, the more conservative entries above 8800. However, if you're going to go above, you need to go above the trend line. anywhere around 87.80. But as I say, the more conservative entry is above the recent high. So if you wait for the recent high, you need a break and close above 88.13, then a pullback, then a move further up. It's all a little bit messy. It is very unusual to have a scenario where, for example, on that euro, the price is still stopped despite all the negative news, and the pound continues to fall. And therefore, just be a little bit wary this week. Don't be in more than one trade at a time, because you could well find that we get some major pullbacks while the markets sort themselves out before continuing. Have a good week.